Deputy Owen Murphy.
Thank you, Chair, and thank you, Mr. Doyle. I just have a few brief questions following on from your early evidence today. You said earlier on that accepting the consensus view of the soft landing was a mistake. But were you not a part of formulating that consensus view, indeed that language, soft landing? Because we heard in evidence from Tom O'Connell about the 2007 Financial Stability Report, which talked about favouring a soft landing over a hard landing. Professor Honohan told us that there was no evidence in that report, and there is none, to back up that assertion. And Mr. O'Connell told us that that language came from the board, which you sat on at the time. So do you remember that conversation about putting that language into the document?
I don't recall that. I have a vague recollection of being sent a draft of some document by Tom O'Connell, whether it was 2007 or 2006, I don't know, or what the document was. Following a discussion at the board members might be sent a document and said, is this okay, does it reflect your views? Might have put something in, and I recall the only instance I ever got that was I sent it back to him and said, you have editorial control.
Because according to Mr. O'Connell, the editorial control was actually exercised by the board in a one-day or two-day session during which they would finalise the language for the Financial Stability Report. And
the board would discuss it, but the final editorial control, in that sense, would be the governor, personally. But he would try to reflect what was going on at the board. But I don't recall a discussion at the board myself to the effect that soft landing is the only credible scenario.
But do you recall receiving that first draft and seeing the soft landing language and taking comfort in it?
I don't, to be honest with you.
You said earlier on that September was the crisis point, but there were earlier crises in 2008. One in particular was the St. Patrick's weekend in March of that year. At that point, one bank, no one would lend to one bank in the Irish economy. Another bank, no Irish bank would lend to. The governor and the financial regulator were approaching each of the banks, asking them to lend to each other. That was the Green Jersey agenda. 20 billion had been wiped off bank shares in Ireland since the beginning of the year, and there was a feared run on one bank, which led to intervention. So why not move in then? Why not take the opportunity then to seek a resolution?
For a start, there definitely was confusion in the minds of the banks themselves about what was the driving force for that speculation and threatened runs and adverse comment. Was it international speculation? Was it caused by some of the speculation in shares that was going on that really would be difficult to go through? Was it based on analytical evidence on what the true story in the banks was, or was it just an anti-Irish story, or did it reflect the common things that were happening across Europe, the UK, a massive downward trend in share prices generally? The trend in Irish share prices was more, but there was clouded thinking there.
Okay.
There was a cloud. Was this a real Irish problem, or was it because of the international
That's just
problem?
a potential share run, though. That's almost a crisis point in itself. At the end of the first few months of the year, which have already seen a number of mini crises, and I listed them out, the different things that were happening. Banks weren't lending to Irish banks. Irish banks weren't lending to each other. The financial regulator and the governor were going to the banks, asking them to lend to each other, and they were not ignoring them. So why not take the opportunity then? And it's come up briefly raised by other colleagues. Why not step in then and make a resolution?
With the guarantee, with nationalisation?
With anything that's already been discussed by the domestic standing group since the summer of the previous year.
Yeah. Well,
you're anticipating something. Why not take an opportunity then?
Well, it's a viewpoint that maybe an intervention. There was no evidence being produced by the banks themselves that an intervention was necessary or appropriate. There was no analysis from the regulator or the central bank that an actual intervention was necessary. There was standby arrangements being pushed through that consultative process with the bank and the regulator and the department to prepare for an event in the future. The event hadn't crystallised. Possibly if you had stepped forward and with an announcement at the time that the government was going to stand behind the banks and provide capital, that might have calmed the market down. But the real problem was that when it came to the crunch, and the problem was created by the explosive increase in credit rolled out by the banks. When it came to the crunch, the assets that they had lined up, particularly on the development side, weren't remotely near worth what their loans that they had issued for those assets.
I don't want to go over old ground, Mr. Doyle. I'm actually running out of time, so I'll just move on to just briefly. Were any decisions taken at that cabinet meeting on the 28th of September, the Sunday meeting in 2008? Any decisions by cabinet in relation to the banks?
I don't know. I have read what cabinet says about that, but I don't know. I was never informed.
But if the cabinet makes a decision, you would be informed.
About the banks now?
Yeah.
Well, not always. The cabinet could have a discussion, arrive at a preliminary view, arrive at a decision in principle. They're going to think about it. Don't necessarily release it. They'll release a decision when they've made a final decision. So, I realise what's in Kevin's document, but I wasn't made aware that they had, as Kevin's suggesting, made some sort of a decision in principle.
Thank you. Earlier on in evidence, you were talking about the Minister and the Taoiseach going into a room and coming back out and saying that we're going for a guarantee and not nationalisation, and you used the words "for the moment." So was it implied that nationalisation was coming shortly down the line?
The nationalisation, if it had been decided, wasn't going to happen that night, but it would have taken a couple of days to put in place. It's a messy arrangement. The preference of the bank and the regulator was to do it at the weekend. Now, as I said, my recollection is that's what the Taoiseach said. So I haven't seen it written anywhere. But that's my recollection.
From your recollection,
whether he meant, whether he did in fact say that, I'm basing that on a non-contemporaneous note that I prepared myself about 2 years ago about the night. And that was my recollection, trying to dredge it up from my subconsciousness, what happened on the night. And I noted that in that particular non-contemporaneous account, which is a personal one.
But even if that isn't your recollection, or even if it isn't accurate, does it infer that you were expecting nationalisation to come shortly after the guarantee decision?
It wasn't being ruled out.
Wasn't being ruled out.
That's my interpretation on it.
Okay, thank you. There's two other brief questions. Were you aware of the overexposure of the banks to commercial property from 2006 when you took over as Secretary General of the Department of Finance?
I was aware from what the central bank work was being done that the scale of property exposure was significant. Was I aware that they were issuing loans without adequate appraisal of the valuation, the net worth of the individuals, the cross-collateral, the personal wealth, other pledged assets, inadequate documentation?
You were aware of the exposure, though, which is the question.
I was aware of the exposure, but I would have always assumed that the banks were being run on a sensible basis, that if they were lending money to David Doyle for 100 million, that they would check out David Doyle and expect David Doyle to put up significant equity, that in return for lending David Doyle 80 million or whatever, that I would have sufficient assets behind me to back that up. I would have checked out the exposures of David Doyle to other banks. Now, all of these things were going on.
Yeah, but surely the point of a whole regulatory infrastructure assumes that you can't just trust the banks. So when you became aware of that overexposure, what did you do about it to satisfy yourself that it wasn't a risk to the economy or to the banking system?
I don't think I said, maybe I didn't intend to say I was aware of overexposure. I was aware of de-exposure.
De-exposure. And you didn't consider it an overexposure?
Well, what the analysis that the industry and the financial regulator were presenting was that the overall exposures of the banks still left them in a profitable, solvent, liquid and well-managed state. That was the story. As I said originally at the outset, it is a matter of regret that the Department accepted that analysis of the banks, the regulator and the central bank.
Okay. Thank you. Thank you, Chair.